Bismillah ar-Rahman ar-Rahim. We will start this lecture. Makes Motel opened for business on May 1, 2017. Its trial balance before adjustments on May 31 is as the following. The trial balance, we will get that accounts for cash 3,500, supplies 2,080, prepaid insurance 2,400, land 12,000, buildings 60,000, equipment 15,000, accounts payable in the credit 4,800, unearned rent revenue 3,300, mortgage payable 40,000, the owner's capital 41,380, rent revenue 10,300, advertising expense 600, and supplies and wages expense 3,300, utilities expense 800, and the total 99,780. In addition to these accounts listed on the trial balance, the chart of accounts for Max Motel also contains the following accounts and account numbers. We will start with the additional accounts: accumulated depreciation for buildings, accumulated depreciation for equipment, salaries and wages payable, interest payable, depreciation expense, supplies expense, interest expense, and insurance expense. The additional transactions happened. Number 1, prepaid insurance is a 1-year policy starting on May 1, 2017. Number 2, account of supplies shows 750 of unused supplies on May 31. Number 3, annual depreciation is 3,000 on the building and 1,500 on equipment. Number 4, mortgage interest rate is 12%. The mortgage was taken out on May 1. Number 5, 2/3 of the unearned rent revenue has been earned. Number 6, salaries of 750 are accrued and unpaid at May 31. And they are required to journalize the adjusting entries on May 31 and prepare an adjusted trial balance on May 31. We will start to answer this problem. First transaction for the first transaction prepaid insurance is a 1-year policy starting on May 1. The entry will be in the debit insurance expense and the credit prepaid insurance. How to calculate the amount? 2,400 divided by 12 months, and the amount will be 200 for every month. And the next transaction, account of supplies show 750 of unused supplies on May 31. The entry in the debit will be supplies expense and the credit for supplies. The amount to be in this transaction, the account appear in the trial balance for 2,080 and the entry tell us that unused 750 and the amount to be in the entry 1033 330 1330. The next entry will be from depreciation expense for building in the debit and accumulated depreciation for building in the credit for the amount 3000, and another entry depreciation expense for equipment for accumulated depreciation equipment in the credit for the amount 1500. The next transaction number 4, the mortgage interest rate is 12% and was taken out on May 1. The entry will be from interest expenses the debit for interest payable in the credit, and the amount, how to calculate the amount, 40,000 multiplied by 12% rate multiplied by 1 divided by 12 to calculate for 1 month interest expense. It will be 400. The next transaction for unearned rent revenue to be 2/3 of them become actually revenue, and the entry will be in the debit on earned rent revenue for the credit rent revenue. The amount to calculate 3,300 multiplied by 2/3 of the rent equals 2,200. And the final transaction and the final entry become salaries and wages expense for salaries and wages payable in the credit for the amount 750, and we will post this for the ledger and before the adjusted trial balance. The adjusted trial balance, we will get some changes in the account, such as supplies appear for us 7 for the amount 750, prepaid insurance for the amount 2,200, and the accumulated depreciation for building 3,000, accumulated depreciation for equipment 1,500, and unearned rent revenue appear in the credit for 1,100, salaries payable 750, interest payable 400, and rent revenue for 12,500, depreciation expense 4,500, interest expense 400, insurance expense 200, salaries and wages for the amount 4,050, and the total will become 100,830. And finally, good luck for all. Thanks.